Hello, everyone. Today is Tuesday, December 9th, 2025. Hope everyone is doing well mentally and physically. Welcome back to another episode of Tax and Accounting Ride Along, brought to you by Sands Virtual Enterprise, LLC, your go-to dose of straight-talking tax and accounting insights for small businesses and the everyday taxpayer in the general public. Today, we are going to be discussing another practical, high-level tax strategy for you to consider before year-end. This strategy outlines how you can legally pay zero taxes on over $100,000 of income. You don't want to miss this one. It is highly practical, and you don't need to be nowhere near retirement age. So without much further ado, let's crank it up and get straight to it.
Okay, let's just jump right in. We're doing a deep dive today on something that sounds, well, frankly, almost impossible. We're talking about how someone could generate over $100,000 in income for the 2025 tax year and legally pay a $0 tax bill.
Right, and to even begin to understand this, you have to separate your income into two main buckets.
Okay, what are they?
So first, you've got your ordinary income. That's your W-2 from a job, and it's taxed at those regular rates we all know, from 10% all the way up to 37%.
The standard stuff.
Exactly. Then you have your long-term portfolio income, and we're being specific here, gains from selling stocks or funds you've held for over a year.
The stuff on a 1099-B form.
Yep, and those are taxed at much lower capital gains rates, 0%, 15%, or 20%, and that 0% is the absolute key here.
And just so we're crystal clear, this strategy has nothing to do with retirement account income, like from a 401k withdrawal.
No, not at all. That's a different world. This is all about your taxable brokerage account.
Right. Because I think a lot of people might hear this and just assume it's about, maxing out your 401k or doing some tax loss harvesting.
And those are good things to do, absolutely. But on an income over $100,000, they usually just shift the tax burden.
They don't get you to zero.
They don't get you to zero. There's a much more surgical strategy at play.
Oh, what is that?
The whole thing is built around one single tool, the 0% long-term capital gains tax bracket.
Okay, so let's get the numbers. What's the threshold for 2025?
For single filers, your taxable income has to be below $48,350. But for our example, and this is really important, for married couples filing jointly, that threshold is much higher. It's $96,700.
$96,700. Okay, that's the magic number. But here's the part that I think really confuses people. Our source material gives this great example of a couple, Mike and Mary, who had a total income of $114,000.
Right.
So how on earth do they stay under that $96,000 threshold?
This is where the planning is just beautiful. Their income was split very deliberately.
Okay, so how do they do it?
They had a combined W-2 income of only $27,000 from some part-time work.
$27,000. That's very low.
Very low. And the rest, the big piece, was $87,000 in long-term capital gains from selling some mutual funds.
So add it up, and you get their $114,000 total income. So way over the limit. So this is where the standard deduction comes in, isn't it?
This is exactly where it comes in. It's the linchpin of the whole thing. For 2025, the standard deduction for a married couple is $31,500.
Okay, and their earned income was only $27,000.
So that $31,500 deduction is larger than their entire W-2 income.
Wait, let's pause on that. It completely shields it.
It completely shields it. Every single dollar of that W-2 income is effectively wiped out for tax purposes.
That's the aha moment. The money they actually work for just vanishes from the tax calculation.
Precisely. So what's left for their taxable income?
Just the capital gains.
Just the $87,000 in capital gains.
And $87,000 is safely under the $96,700 threshold.
Which means the tax rate on that $87,000 is
zero. They pay zero tax.
Zero on a total income of $114,000.
So the big takeaway here for you listening is that this is not some loophole or a lucky break. This is pure deliberate strategy.
It really is. It's about that careful dance between keeping your W-2 income low enough to fit under the standard deduction shield.
And then filling the rest of your income needs using that beautiful 0% capital gains bracket.
And I think the provocative thought to leave you with is this. Getting your taxable income to over $80,000 while paying zero tax is not a fluke.
It's by design.
It is a design outcome. It's about understanding how ordinary income and capital gains actually interact under the law. And it really forces you to ask, is your financial plan just about investing? Or is it truly integrated with a sophisticated tax strategy? That is where a great CPA tax advisor really shows their value.
Well, folks, that's a wrap. Thanks for joining us for another episode of Tax and Accounting Ride-Along, courtesy of Sands Virtual Enterprise, LLC. Got feedback or curious questions? Or maybe a topic that needs some airtime? We'd love to hear from you. Connect with us at admin@sve-accountingandtaxes.com or text us at 404-5858513. Also, follow us on Facebook, Instagram, TikTok, YouTube, and LinkedIn for more insights. Catch you next time for more business talks and good times.